We are told to trust the system. Bitcoin, they say, is the future of finance, the dollar, the bedrock of the global economy. But what if these narratives are built on shaky ground? What if the very foundations of our financial system are more fragile than we care to admit? The truth is, we are living in an age of unprecedented uncertainty. Global debt is at an all-time high. Geopolitical tensions are simmering, and the traditional safeguards, the things we once relied on for stability, are proving increasingly unreliable. It is time to question the assumptions that have brought us to this point. It is time to consider that the future of finance may look very different from its past. And it is time to prepare ourselves for a world where the old rules no longer apply. We must confront uncomfortable truths. We must acknowledge the fragility of the systems we have built, and we must begin to explore alternative paths forward, paths that prioritize resilience, adaptability, and a healthy dose of skepticism. The time for complacency is over. The time for clear-eyed assessment and decisive action is now. Bitcoin, the decentralized digital currency, has been touted as a revolutionary force in finance. Its proponents promise a future free from government control and traditional banking systems. But a closer look reveals a system riddled with vulnerabilities. One glaring issue is the concentration of ownership. A small number of individuals and entities hold a disproportionate amount of Bitcoin. This concentration of wealth creates systemic risks. It makes the market susceptible to manipulation and sudden crashes. Furthermore, Bitcoin's energy consumption is unsustainable. The process of mining Bitcoin requires vast amounts of electricity, contributing significantly to carbon emissions. As the world grapples with climate change, this reliance on energy-intensive processes is a serious concern. Finally, Bitcoin's value is driven by speculation and hype. Its price has experienced dramatic booms and busts, leaving many investors burned. This cyclical nature makes it a highly volatile and unreliable store of value. The allure of quick riches often overshadows the underlying risks. The US dollar has long reigned supreme as the world's reserve currency, but its dominance is being challenged on multiple fronts. The United States is grappling with an unprecedented national debt, a ticking time bomb threatening to upend the global financial order. Inflation is another pressing concern. The relentless printing of money by central banks has eroded the purchasing power of the dollar. This devaluation hurts savers and those on fixed incomes. It undermines confidence in the currency that underpins the global economy. The current system is unsustainable. The United States cannot continue to rack up debt and print money with impunity. The consequences of such reckless policies will be severe. We are witnessing the slow-motion unraveling of a system built on debt and illusion. The world is waking up to the reality that the dollar is not the safe haven it once was. Countries are seeking alternatives, reducing their reliance on the dollar and exploring new forms of financial cooperation. The era of American financial hegemony is coming to an end. Geopolitical tensions are rising, adding further instability to the global financial system. The war in Ukraine, the escalating rivalry between the United States and China, and the resurgence of nationalism and protectionism are all contributing to a climate of uncertainty and distrust. These conflicts have real-world consequences. They disrupt supply chains, fuel inflation, and erode confidence in global institutions. They create an environment where risk aversion prevails, and investors seek safe havens for their wealth. In times of turmoil, traditional assets like stocks and bonds become increasingly risky. Their value is subject to the whims of markets and the decisions of policymakers. Investors are left searching for assets that can withstand the storm, assets that are not subject to the same vulnerabilities as the fiat currencies and financial instruments of a world in disarray. Section 5. The Allure of Gold. Throughout history, gold has been a safe haven in times of crisis. It is a tangible asset with intrinsic value, immune to the vagaries of political decisions and central bank manipulation. Unlike fiat currencies, gold cannot be printed into oblivion. Its supply is limited, making it a reliable store of value over the long term. In a world awash in debt and uncertainty, gold offers a sense of security. It is a hedge against inflation, a store of wealth that transcends national borders and political systems. It is a tangible reminder of value in a world increasingly dominated by intangible assets and digital representations of wealth. While digital assets like Bitcoin promise a decentralized future, They are ultimately dependent on technology and vulnerable to hacking and manipulation. Gold, on the other hand, is timeless and immutable. It requires no electricity, no internet connection, and no trust in third parties. It is the ultimate form of financial sovereignty. Section 6. Navigating the financial labyrinth. We are entering uncharted territory. The old rules no longer apply. The financial systems we once relied on are proving increasingly fragile and unpredictable. To navigate this labyrinth, we must embrace a new mindset, one that prioritizes resilience, adaptability, and a healthy dose of skepticism. We must be prepared for black swan events, those unforeseen occurrences that can upend markets and shatter economies. We must diversify our investments, seeking assets that are not correlated with the traditional financial system. And we must be willing to challenge conventional wisdom, questioning the assumptions that have brought us to this point. The future of finance is uncertain, but one thing is clear: those who cling to outdated models and fail to adapt will be left behind. We must be willing to embrace change, to learn from the mistakes of the past, and to chart a new course for a future defined by uncertainty and volatility. One of the critical errors in modern discourse is the conflation of speculation with investment. Bitcoin, with its volatility and susceptibility to manipulation, embodies this problem. It is often touted as an investment, when in reality, it is primarily a tool for speculation. True investment should be about creating value, building businesses, and supporting productive endeavors. It should not be about chasing quick riches or gambling on the latest financial fad. The allure of easy money can be intoxicating, but we must not lose sight of the fundamentals. Sound investment requires patience, discipline, and a long-term perspective. It is about preserving capital, generating steady returns, and building a more resilient financial future. Accountability is crucial in any system, yet the financial world is rife with actors who operate with little to no skin in the game. They profit from risky bets while others bear the consequences. This asymmetry creates moral hazard, encouraging reckless behavior and undermining the integrity of the entire system. We need greater transparency and accountability in finance. Those who make decisions should have a personal stake in the outcomes. This principle aligns incentives and promotes responsible behavior. It is time to restore trust and fairness to the financial system by ensuring that everyone has skin in the game. In an age of unprecedented technological advancement, it is easy to forget the timeless wisdom of prudence. The allure of the new and shiny often blinds us to the enduring value of age-old principles. We must remember that complexity breeds fragility. The more intricate and interconnected a system becomes, the more vulnerable it is to shocks and disruptions. Simplicity and resilience go hand in hand. We should strive for systems that are robust, adaptable, and easy to understand. This approach reduces the potential for catastrophic failure and allows us to better navigate uncertainty. The future is inherently uncertain. Black swan events, by definition, are unpredictable. We cannot foresee every potential crisis or anticipate every market swing. But we can prepare ourselves for the unknown by embracing a mindset of resilience and adaptability. This means diversifying our investments, reducing our reliance on debt, and building a cushion of savings to weather unexpected storms. It also means cultivating a healthy skepticism towards grand narratives and utopian promises. The world is changing at an unprecedented pace. The financial landscape of tomorrow will look vastly different from that of today. Those who embrace this reality, who prepare for the unthinkable, will be best positioned to navigate the challenges and